Oh, Matt, Robert Vallis, CEO, President Director of Signature Resources. As you know, we're a Canadian gold exploration firm with a rather large land package in northwestern Ontario. We're actively drilling and exploring a land package that's nearly 300 square kilometers, 90% of a greenstone belt in Canada, making great headroads and progressing well into this fall.
Rob, good to see you back. We saw you mid-June, I believe. Lots happened since we last spoke, mostly thrown at you by Mother Nature.
Indeed. The summer had its share of challenges, and that's not to say that COVID wasn't right along with us, that's for sure. The summer in our region, at least, revealed a lot of unfortunate wildfires that took place to the point where almost half of Canada was on fire at one point. It was incredible. That, though, in itself was a threatening situation for us regionally. But then when that threat subsided, the smoke became something else that was, a significant health threat and risk to having people on the ground. The Ontario Ministry took further steps when that reached a threshold of necessary evacuations and so forth throughout Western Ontario into Manitoba. They put restrictions in place that really shut down pretty much all work in remote areas or in the forests. We were able to claw back some of that and get some support from the ministry to get in once our situation where we are subsided enough where we could safely put people in again. And from that, we were able to progressively claw our way back, create more of a defensive situation in that sort of condition in terms of fire protections and so forth, and then advance back into the things that really got delayed throughout the month of July, which was a lot of geophysical surveys, airborne and on the ground, and then amping up and optimizing our exploration camp to more safely, more cost effectively support a significantly upscaled capacity, to be able to start running it 24/7.
Okay, so for as far as smoke, does that explain the 50% drop in share price?
I think in part because of the delay in material news, that would definitely be part of it. The other part is obviously the warrants that we have that are expiring towards the end of this year. But I think you put those two together in an ocean of lowering tides and macro financial situations, increasing volatility. It was a situation we were in. But we're certainly happy now to be back and focused on delivering these results promptly. So we've announced earlier this week that we have commenced drilling again. So we've achieved a lot in a short amount of time.
Okay, and I want to come on to that, Rob. I do. Let's deal with some of the numbers and the structures going on here. You've got these warrants, like 70 million plus warrants. So break that down for me. What does that look like? Why are people concerned about the overhang?
I think, success that we're looking to get back to in terms of generating exciting results and demonstrating the progression, which we're definitely moving on, both regionally in terms of new discoveries and locally in terms of growing ounces in the ground. That indicates that with the successful exercise of the warrants that are expiring this year, which I believe is somewhere around 3.5 to 4 million Canadian dollars worth. So that's 30 to 35 million warrants expiring. It's certainly potential for further share issuance. However, the counter to that is that the pricing that we're at is actually an opportunity to come in, not have to really be thinking much about dilution as a shareholder, get in at a ground level that is in my opinion something that'll be increasingly rare, and backwards looking as we move forward and work to meaningfully increase the share price.
Okay, so it's about 35 million warrants expiring by the end of this year. That's the number.
Approximately, yeah, averaging about 10 cents.
Got it.
Exercise.
Got it. Yeah. Understood. And there was talk also about rollbacks.
We voted at our AGM in March of this year. We had successfully, voted with our shareholders a mechanism or a tool, if you will, to be able to consolidate our shares up to a 5-to-1. It's a tool. It's on the shelf. It's something that is an opportunity that we look at and will roll into our overall strategy of continuing to grow now that we're situated on the ground, now that we've collected the data we need, now that we've started drilling to perpetuate and increase the rate of growth and value delivery. It's an opportunity to really optimize the financial side of that, but also, move a share price to where it becomes on the radars of other, markets where they look at nothing less than a particular price threshold. So, but more than anything, it's really about prudence on the financial side. We know that we have half the warrants expiring this year, half next. And with that, we'll have a significant rebalance of our capital structure. And from that, having that tool on the shelf provides us another opportunity to bring value to shareholders and increase the attractiveness.
Okay, so like I say, since we last spoke, you've kind of come off your own 18 million market cap. So whatever whether you do a rollback and whatever the share price is as a result of whatever number you put on that, 18 million market cap, it's a small company. There's lots of small companies of your size trying to, attract the attention of institutions, retail family offices. And it's tough. And it's very tough in this environment where gold's not had a particularly good time of late. Last 12 months have, been a little bit less meteoric than people were expecting last year. So how do you go about it? You got to be, you've always been, you talked conservative language. You've got to be, you got to be careful with the money that you've got. You raised $3.9 million. You did a bit of a drill program. You've got a new drill program starting, I noticed, which you can talk to me about in a minute. But you're going to need to go to market at some point if the warrants don't bring in as much as you thought. How do you talk to the market along with all of these other companies, all of these other peers, competitors in a similar position to you? How do you stand out?
You stand out the way we have from day one, which is the what we have and the results we get from it. Essentially, we're on course to begin generating significant results from the drill bit, but also regionally in terms of new high potential target identification, having the entire land package surveyed now. So there's two fronts we're working on to deliver results. So we move with and engage with the market, with the facts, with the data, with the results. And we're on course, and we'll continue to be generating those results so that we have more and more meaningful things to put in front of us in terms of value proposition.
Do you think there's enough money out there? Because people have lost interest in gold a little bit. They've been distracted by other investments. Sure, they're a little bit concerned about the economy at the moment. You've got brilliant people at either sides of the same argument arguing a case for the market shooting off again for gold next year, and you've got other people going, there's going to be a huge recorrection in the marketplace. There's a huge uncertainty is what I'm saying. So again, you and lots of people telling the same story that you've just outlined to me. How do you stand out? Is it going to be reputational, track record? I mean, what do you got that they haven't?
Well, a lot of it's in our logo there. You see the discipline, getting things done through execution, growing our integrity. Okay, so what that really is about continuing to deliver results to the street, bring forward value that is tangible. We stand out by being in a position where we're poised and are beginning to do that. Between doing that through growth and of ounces through the drill bit, but also taking advantage of a rare and significantly high valued regional potential and moving that forward, we're actually very well positioned to deliver significant results in the short term and continue to do so. So from that perspective, we offer something in a safe jurisdiction, with a significant discovery already in hand, significant potential across the board as I've outlined. With it, it's one opportunity in terms of jurisdiction, investment, scale, potential for growth that checks all the boxes for investors. And I think that's the kind of investment that can and will, ride through these tumultuous times in the macro markets. Of course, there will be uncertainty, but as things correct and find a new equilibrium, we are and will remain very well positioned to deliver on that.
So you're going to have to rely on the retail investor market for your money. Because I just say again, with this nervousness about where the economy is going, the institutions are going to want to play it a little bit more cautiously with a straighter bat, as we say here in the UK, where less risk associated, near production or near some kind of event which they could monetize. There's so many small exploration companies out there, high risk, high return if they get it right, but most of them don't come off. Do you think we'll see that kind of return to, this, markets behavior as before, where the kind of institutional money is just not there for you and it is going to have to be about retail, and you're going to have to hope they're not distracted by, I don't know, Bitcoin or some other nefarious activity?
I think it's about having the characteristics of what you have out front and delivering value. You have to differentiate from the norm.
But who to? My point is who to? Who's the audience? Who's listening?
Who is listening at the end of the day? It's investors that are looking for a solid, predictable, value potential stock, really, in a low risk jurisdiction, if we will, to deliver that value.
But is it institutional? Is it family offices? Is it retail?
Institutional. It's at the end of the day, it's about managing what you have and being prudent with what you have and disciplined. So what we are doing is, or at least myself and the team, our hand is very firmly on the throttle in terms of cash burn and spend. So the fact that we're now stabilized, running that cash through the drill bit, generating results at a pace that we feel is sustainable and manageable, it means that we're in a good position to ride our way through this and deliver those results I'm talking about that will and is expected to increase the attention of institutional investors as well as retail. It's really building that case. You can't attract attention and interest out of thin air. You have to deliver the results. So how you do that, how disciplined and prudent you are about it, how you choose to execute is everything. We have a world-class team. We're running things as optimally as we can at this stage. We have other opportunities to further improve our cost structure and rate of delivery of value. So it's a culmination of all of that really allows you to present something to institutional and retail investors alike that represents a compelling case for value.
Right. Okay. Well, let's. I think it's one of those kind of great unknowns. As the market evolves, the market will evolve, and you'll react accordingly. Let's talk about the drill program. You put a press release out talking about the restart, 10,000 meters around Lingman Lake east side. And this is obviously following some of the geophysical activity that you've been able to do. You took language with me in the past of having a couple of rigs. So talk to me about how that is mapped and planned out. What are you going to be targeting? And again, what do you need this campaign to be able to give you to have valuable, meaningful, successful conversations with funders down the line?
Our drilling campaign, as you mentioned, and as we've communicated through our press releases, is focused on the eastern extents where the majority of the historical ounces are. Our focus is to begin moving that and growing that in all directions, primarily to depth as well as on strike. That's step one. Step two, locally, is to continue evaluating and working with the west side of that diabase dike feature, where we initially started drilling in the spring and fall, but it was essentially blind drilling. The data that we've collected, essentially these geophysical surveys, all come together and aggregate into an understanding and a clarity that will allow us to vector in our drilling much more effectively towards targeting and growing ounces as rapidly as possible. So what we need, obviously, out of that is to demonstrate that this drilling is doing exactly that. It's stepping out, it's growing the mineralization, it's adding ounces. That's just one front. The parallel front to that is the regional exploration, which has, in my opinion, as much, if not more, value potential to it. We've got a significant number of targets. We're putting out a schedule, if you will, or a series of objectives that we're targeting to demonstrate and clarify with our investors what we're doing and how we're beginning to unlock that regional potential. The data you're going to be seeing soon, sometime in October, will substantiate that. It's significant when you've got 90% of an entire greenstone belt and the number of high potential targets we have. There's a lot of opportunity to generate value there. So that's what we're doing. That's what we're going to be executing on, and bringing those results to the table. And that brings it full circle to what you asked, which is, what do you need? Well, that's what we need to bring back, is tangible results that show growth of ounces and an existing mineral occurrence, if you will, as well as growth and new discovery on a regional scale.
Okay, so there's a few ways you can come at this. So I kind of look at the Birimian greenstone belt in West Africa because there's companies there have come at it in different ways. You've got a historic resource of about, 235,000 ounces of gold?
234,000, yeah.
234,000 ounces of gold. At around 6.8, 6.9 grams per ton. If I look at companies like Rox Gold, they kind of kick something off with a 400,000 or just under 500,000 ounce resource, and they just wanted to get into production and get some cash flowing. You've got other companies that said, actually, no, we want to build up a 5 million ounce resource before we flip it on, or even think about getting into production. So there's lots of ways you can come at this thing. So where does this 234 ounce historic resource sit in your thinking with regards to how you move this forward? Because again, when small companies, 18 million market cap companies with a little amount of cash, talk to me about developing or expanding and districts or district-wide opportunities, it's not believable. It's hard to imagine how they go about doing that without diluting the current shareholders. So how do you come at it?
Balanced approach. Exploration is a discovery process. We've far enough down the road where we've discovered that there is significant potential. It requires something much less than the lion's share of funding to deliver indications of value there. It doesn't mean that as a junior exploration company, we would be running down a rabbit hole, drilling out 2, 3, or 4 deposits. It's about discovering and validating potential. Along with that, at the site itself, where we are expanding, the growth of ounces in terms of targeting, we have 234,000 ounces historical right now. We are working to finalize a conversion of that, if you will, as a foundation into 43-101, and have a platform, which we have now, of significant amounts of data from other sources compiled to give us the best image of what we have, so that we can point the drill bit at and grow. So what does that all translate to? It translates really, and the ultimate focus is delivering in a maiden resource sometime in 2022, which is what I've been saying we do from day one, likely later in the second half of 2022. A maiden resource that represents, and this is from my experiences, developing a foundation of a viable mineral deposit that's sufficiently delineated to sufficiently project what production potential is and walk through that way. If you invert that and infer that you may have potential enough for development and production, in my view, in my experiences, that's putting the cart ahead of the horse. So delivering this value in a way that's rock solid. We grow this through the drill bit first, and to wrap that up, it's really about delivering something that's multiples of what you started with. So you hear a number of companies that come out of the gate and put out their, a maiden resource that's derived from an historical, and really don't do much to move that needle after that. What we're focused on, and this is where the discipline kicks in, is delivering multiples of that at as consistent and faster rate as we can. So if you think quarterly, how many ounces we're expecting to add quarterly through our drilling, it's the kind of thinking that we're moving into now that we're positioned in the steady state drill and mineralization growth. So the whole point is that, by mid next year, we would expect to be at a point where we've delineated multiples of what we've started with. Now that could be ounces, grade, scale, or all three, or any combination. Either way, you've delivered significant value, and to crystallize that in a maiden resource would be the next prudent step, to crystallize that value and continue that growth.
Right. It's exactly where I wanted to go, because if I look at even last year, whereas a very kind of frothy market. Okay, it was all about the promote. It was all about sentiment driving projects which didn't necessarily stack up, and as a consequence, some good projects and some bad projects didn't get noticed. You refer to a style of creating value, which is take a historic resource, update it, bang, there's your first 1 million ounce maiden resource. Now, what's the market think? And quite often it was not a lot. Right, and that was too much to the chagrin of a lot of CEOs. So that's why I wanted to understand, how you approach your historic resource. How much do you need to bolt on to it? Is it 500,000 ounce? It will be fine. Do you hold out and say no? We need to have 1 million ounces on that thing, because you've seen different companies have different reactions from the market. Where they were expecting, the market to be celebrating, the market did not. So how do you measure that sentiment between now and putting out the maiden resource? Do you make a commitment to put out a resource the second half of next year and then realize, well, actually, it's going to take a lot more than that to move the dial, so let's not bother? I mean, it's really tough one to manage. I don't envy you, but how do you manage that?
Again, with the facts, with everything you have to have confidence and assurance that you are in a position that you will be growing this. That comes down to rate of growth. And from that rate of growth and time, you're going to end up somewhere, as I already said, probably by mid next year, with more than what you've started with, right? So it's really about focusing on generating that and getting to a position where you're able to just predictably grow, and at some point put a rubber stamp on that. Exactly. And from that, coming from the producing side of this industry, there are thresholds that garnish the attention of producers. That is what supersedes and trumps arm waving and prediction. It's what have you delineated, even if you're not quite at a threshold of ounces that starts to suggest, commercially viable, even decent mine life. What has been your rate of growth to get there, and how solid it is that? So by us delivering that in an airtight way, in a consistent way, that is what we're marching towards. And different people can speculate what those thresholds are, but if you do the math on things, I think once you start hitting or approaching 1 million ounces, so if we arrive anywhere between where we are and 1 million ounces, then we've put a stake in the ground that said we're growing, we're moving towards that, we're still open, we're still growing on strike and depth. And oh, by the way, we've got new discoveries that have the same, if not more, potential. That's what we're working to unlock as well. That's a compelling value proposition, not only for investors that are looking to benefit from that growth curve that we're on, but also on the other side of the industry with producers to deliver something that has integrity, that has the ability to stand up to scrutiny, and from that suggest that it's viable, right?
Well, that's what we hope for as investors, that we can stand up to scrutiny, but quite often they don't, right? And that's the problem here, and that's why we try and dig in.
It's the rule of never cutting corners in this industry. I will be the first and probably the last to stand up and pound a table and say you must never do that. This is one industry where it will always slingshot back to you. So you have to be disciplined. And you have to execute. That's it. It's not just your team's integrity, but it's the integrity of the data, what you're doing, and ultimately where you're going. If you can't deliver something that, suggests that it has commercial potential, but you haven't quite delineated that, or had created something with that's watertight for moving to the next stages and floating its way through the engineering phases into a feasibility decision, then you're really cutting corners and gambling.
Okay, well, look. Now you've kind of set out the plan for us and gives us something to judge you by as the months come. As the time as it gets closer to those delivery points. Just one last question with regards to the drilling. You talked about 10,000 meters. I don't know how much is that including drilling that's already happened, or is that 10,000 new meters? And if so, how much cash have you got? How long does that last you?
That's 10,000 new meters that we're targeting. We got just under 4 million right now. We throttled back our drilling rate. We're drilling 24/7, but instead of 2 rigs running flat out, which we have, what we're doing is using 1 rig flat out, but using the second rig to leapfrog the setups so that we have zero downtime, zero cost of or waste. From a financial perspective in the process. So literally every dollar is going into the drill bit at this stage. So it's an efficient way of doing it, but it's a conservative way that will certainly allow us to make our way through this remainder of this year and into the new year.
Okay, Rob, thanks for the catch up. Like I say, you've given us something to judge you by. Come back on, let us know how you get on, okay?
Appreciate it. Thank you, Matthew.